Hello to everyone. Today I am here with Anti-Money Laundering Part 3. If you are interested to have more videos on banking and finance related topics, please do subscribe my channel. Today we are going to discuss anti-money laundering awareness to stakeholders. Here we will discuss first of all regarding key stakeholders, anti-money laundering, derivative, staff awareness, obligation, and procedure maintenance. Unclear key stakeholders. Key stakeholders, beneficiary of the business that the customer represents, complex organizational structure that include shell companies. Shell companies usually pose as normal businesses. Financial firms should practice constant vigilance to avoid dealing with shell companies. Money laundering directives. The first of 5 EU directives on money laundering comes into force in the UK on 1st April 1994. The first money laundering directive to prevent financial institutions from helping to lender money, it requires them to verify the identity of the customer opening account. Secondly, keeping record of this identification. Thirdly, trained staff in anti-money laundering practices. Fourthly, designate a money laundering reporting officer in the company. The money laundering reporting officer is responsible for reporting suspicions of money laundering. Any type of transaction that looks like suspicious within the organization, report by any of the officers of the organization, come to money laundering reporting officer. The second money laundering directive, people engaging in the businesses above to have to maintain internal control and communication, identification procedures, recognition of suspicious transaction and reporting procedure. Some businesses complied above the new requirement regarding their confidentiality because it's a big issue. Some businesses might break the law by accepting over £10,000 in cash payment or enforce the limit by enforcing body of their country. So this limit may vary from country to country. The third money laundering directive was focused on terror financing on December 15, 2007 in force. It made the change that include the new definition from the political exposed person who hold the permanent public offices, that is, members of parliament, ambassadors, Supreme Court judges, central bank board members, or as defined by the country. Require money services businesses, trust and company services providers to pass a fit and proper test, that is, list of things they must not have done. Enhance the rules on customer due diligence, banned anonymous accounts. So such sections are already taken by many countries because they ask all the account holders for their biometric. And definitely after having the biometric, such practices will eliminate from the financial system. Thereafter, added state agencies to the list of regulated businesses, required casinos to verify the identification of customers who gamble £2,000 or more, or as defined by the regulatory body of the country. The fourth money laundering directive come into force in 2017 and encourage risk-based instead of rules. Some changes were that tax crimes become a critical offense in money laundering. More international viral transfers and electronic and mobile payments require beneficiary information, because in most of the cases mobiles are used, and it was also remained a part of the practice that most of the mobile SIMs were enormous. Adjustment to the rules on beneficial ownership. That is when someone owns asset or property, but it in an other's name, for example, by using broker. The approach meant that the firm could take on risky clients, but would have acknowledged the risk. The fifth money laundering directive introduced in Jan 2020, it expands the requirement to check the new category of the businesses and increase the transparency requirement for beneficial owner of the company and trust. It also lowered the threshold on identification the holder of the prepaid card from £250 to £125 and improve the cooperation between the European Union Financial Intelligence Unit. This threshold can again differ from country to country. It also improved the check on non-European Union countries that they considered risky. Staff awareness threshold. The dealing personnel unit beware of obligatory legislation and the risk-based approach. Know how the money laundering reporting officer is understanding its role. Be aware how to respond to possible money laundering or the terrorist financing activity as per company's procedure. Understand how could represent terrorist financing should appear in the record. Understand the business legal position and that of its employees. Understand how these could change as a result of the action taken. Know how to operate a risk-based approach to prevent the money laundering and terrorist financing. So you should be in depth aware about the risk-based approach related to anti-money laundering and terrorist financing. Thereafter, legal and the regulatory obligation, organizations penalized by the regulatory authorities either because of their employees' involvement or lack of knowledge. So both things are important. That's why the regulator asks the financial institution for the proper training of their employees related to anti-money laundering. Sometimes not report the suspicious transaction. Therefore, the staff should know about their obligation and the circumstances that can be faced and how to follow them correctly. Mostly the local regulators make anti-money laundering awareness training necessarily and update their knowledge at appropriate interval for organizations. Thank you very much. See you again with upcoming video on anti-money laundering.